Welcome to Momentum Monday. Howard, how's Phoenix?
Ivan, you in there?
Yeah, I'm here, right?
Can't see you.
Oh, I'm here.
Look, live audience. Look. That's Tom in the background. There really is. That's my app. That's our app, the Tom app. All right, Momentum Monday. It is. I'm in Phoenix today. Ivan, what's today? It's November.
November 12th.
How was the weekend?
The weekend was good. I had some fun, played some volleyball yesterday. How about you?
I had my son and my daughter home, and my son had 3 other of his best buddies from college over. So it was they were out till 4 a.m. each night. I don't know how they do it.
Is he still on Tinder?
Tinder is not about being on or off. It's just part of who these young people are. Snapchat and Tinder is their lives in college. Well, you were a Tinder man yourself. People know it. All around San Diego, you were known as a Tinder man for a while. Now you're spoken for.
Uh-huh.
Now you've cleaned it up and you wear light baby blue shirts. That's a sign that you've given up. Basically, you're off the market. That color shirt with the polo on it.
Yeah, I like it. I mean, no, in bear markets, I like to wear.
Your girlfriend likes it. You would never wear that shirt if you were single.
That's not true. I bought it on my own. So in bear markets, I like to wear T-shirts. In bull markets, I wear shirts. So
you can't get yourself out of bed. You've been in cash, so you've been right. This is just at least we've warned people the last month how brutal this market is, and they should be very careful. I think today's just another one of those days. So we'll go through some of the stuff. Let's start let's start with the Nasdaq. AI. So what are you seeing? And then I'll go through.
Well, there are 2 scenarios here. We either have a new leg lower, or the Nasdaq 100 stops falling here, makes a higher low, and kind of inverts head and shoulders. And then we try to test that 180 level here. I think until the Nasdaq 100 closes above 180, this correction is not over.
Yeah, there is just, for momentum guys like us, until we see a lot of strength. And we saw a little bit, but then Twilio, if we look at Twilio, was the one stock, and Etsy were the ones that broke out, and I'm long Twilio. And today it's just basically giving back all its earnings, not all, half of its earnings gaps. And that kind of makes sense. This market is just so tough. And if we look, there's 2 great stocks. There's tons of corporate activity. Oracle just spent $8 billion on a company. So we're not in a full-on bear market. All right, let's be honest. The companies have cash and they're spending it, and we've only dropped 10% in the Nasdaq. So the mood is such that this is still a pullback. Our job in looking at the Nasdaq here and the price action is to kind of judge risk reward, and there is just no rush. Salesforce kind of breaking below. I think Apple's the key chart too. If we look at Salesforce, that's a leader in enterprise, is almost back to its lows. Apple is through its lows. And so if this is foreshadowing what the Nasdaq will do, if Apple can't find some footing right here, I think this is the big stock of the day. Probably this and Goldman Sachs on the financial side, but Apple is today at its 200-day moving average, and Goldman Sachs is taking out the lows of the meltdown, a couple of weeks ago, and looking terribly weak for whatever reason.
Yeah, new 52-week
Just
low.
don't want to see Goldman. Goldman's back taking out the 2017 lows today. Correct, Ivan?
Yeah, I mean, as I said, new 52-week lows.
I mean, so the market's foreshadowing something. Goldman's got more angles than I don't know what has a lot of angles, but they got the most. Deutsche Bank's looks like a 0. General Electric looks like a 0. So there is some, I don't know if it's like student loans or some kind of loan business that we don't know about right now, but there is something brewing. And if Ivan's now pulling up oil, Charlie pointed out yesterday, 10 days, it's a record, 10 days in a row down for oil. Maybe it's up today, but it was a record 10 days going into today down. A huge 20% move over those 10 days down in oil, which to me is, is good. I mean, because that means inflation fears may be melting away. But there's so many conflicting signals. The big ones to me are Goldman and Apple. And maybe they're not important in the market bottoms without them. And Goldman less important than Apple because of tech. But you just don't like seeing this. And so I think it's hard to play. The first bounce was a little easier for traders. This bounce, the second one's always a little harder because there's just more noise out there. But I think you can trade against that 160 Nasdaq bottom. I am going to try a few things because I have a high cash position. But you're waiting till we see many more new highs in 180-ish on the Nasdaq?
Aggressively long in on swing trade positions for more than a day or two.
But yeah, under your strategy, market's below the 200-day, trending down on the 200-day or flat, and this is the longest they've been below. We've got 3 major dips below the 200-day moving average here, and since October, and today's thrust lower with Apple really crashing is not a good sign. But at the same time, oil dropping, interest rates not continuing to jihad here, and I think it's pretty good in the market to have a check on, for the Democrats politically, to have a check on the president, because we know what the Dems are going to do. They're going to check at every single, I think what's important today is Trump. If we look at the S&P, Ivan, quickly. Just zoom in there. Holding up much better than the Nasdaq, but still below its 200-day, Ivan.
Yeah, I mean, they look very similar.
Yeah,
the correlation is very high during corrections.
Yeah.
Well, speaking of oil, like basically the only 2 industries that are currently holding relatively well are retail and some restaurants. And crude oil might be one of the reasons, since lower crude oil prices are good for the purchasing power.
Yeah, relatively, I said today, Chipotle is holding up. May play catch up to McDonald's. McDonald's doing well. Ulta's got what's her name? One of the Kardashians. My daughter loves that Kardashian, in cahoots with Ulta, and so they've been one of the leading stocks for a long time and back at all-time highs. So that's going to continue to be a leader when this market gets going again. I don't get Crocs.
Crocs is back.
They're ugly, but supposedly young people like them.
I don't know. We have some videos of you from 2006.
Back in the day, but that was 2006. So I've missed this new trend. They're making high fashion rubber shoes, for women. I have never seen a man wearing them in the last 4 or 5 years, at least that I've known. And what a great comeback. I know a lot of friends that have been long that stock as a value stock and have made 4 or 5 times their money. So I don't know what's going on with Crocs. Ivan, do you see people wearing them?
Some people, yeah. I've seen people wearing flip-flops here in San Diego.
Flip-flops, yeah, but not Crocs flip-flops. But anyways, look at those numbers, 78 cents. So they surprised a lot of people. The gap, 30% gap up. I don't know.
Really good.
Hard for me to own this in any new position in this market, especially when I don't really love the product. But congrats to there is stuff working. I think that's the point of that. So Ivan, let's go back to the S&P. And this is why I'm a little bit skeptical of this sell-off, meaning I think I'll be nibbling. I bought a little Apple today, the 200-day again. But Trump, I don't know if you can pull it up, but he's tweeting today that, it's all the Democrats' fault now if the market crash. I mean, obviously he was going to project this. First he was blaming the Fed. Now he's going to blame the Democrats. But I think the market, based on the market move the day after, even though it wasn't a blue wave, the market move the day after, which was super strong, was really the vote that, institutions liked There we go. There's Trump today. The prospect of presidential harassment of the Dems is causing the stock market big headaches. So he's playing to his base who don't own stocks, the people left, blame, blame, blame. I do think the markets can price in the fact that the Dems are predictable. They're going to harass Trump. So that's not what's surprising the market. I think what the market is going to get nervous about is what Trump will do with this new oversight. And we can always see this weekend with the fire, just saying the wrong things and pissing off California, where he has no votes. And I think that's the wild card this weekend, or going forward, is not the Dems, because they're going to be quite predictable. I think the having checks and balances on the White House is what's unpredictable. So let's give this sell-off a few days before we judge it. This could be a really good, bottoming process that we're in. But I don't know.
As long as the S&P holds above 270.
So we are. Other than Apple, which is throwing me off, and Goldman, which are important. A lot of stocks are like Amazon. Are holding well above where they were a week ago. And, but again, below the 200-day with authority here. So the market's not closed today, but we're doing the show midday. What are you see? So restaurants,
and select
the boring stocks, Ivan, continue to do well.
Yeah, some of them, the consumer staples, are still doing well. As you can see, the XOP, which is the Spider's consumer staples ETF, is near 52-week highs, which we typically see before recessions. I mean, the market is forward.
How does this index do during a recession? I just can't see these holding up if the recession.
Well, during an actual correction, all stocks get hit.
Yeah.
I mean, high momentum stocks can drop 40, 50, 80%. Staples will drop 20%.
Yeah. So this shouldn't make you bullish. These are generally leading indicators of what's possibly a recession coming.
Yeah, as I said, the market strives to be forward-looking. It's not always right, and there is a saying that the market has forecasted 12 out of the past 3 recessions. So the market is not always right, but currently this is the major market theme. The market is just pricing in a potential recession next year, and some people say that China is already in a recession. I mean, if you take a look at their stock market, most of their big...
I mean, there's so much negativity about China right now, from their own government to, I don't know how many, 80% of homes are vacant, blah, 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 blah. You don't see these type of fear at the top. You see this kind of stuff in the middle of a headache, and we're China's a mess.
Well, they're already down 30%. And
how much? 40?
30% since their 52-week highs earlier this year.
Yeah.
And this is the CQQQ, which is their basically Chinese Nasdaq.
Yeah. Well, the great Chinese digital wall turns out to be, an edge, but not a forever edge. Stocks with the Chinese digital wall were back to 2014 prices for the index. So in the last year, we've had 4 years of gains, or 3 years of gains wiped out from 2015. And it's ugly. And these are not cheap stocks. And who knows if you trust the numbers. So again, I'm focused in this kind of meltdown on U.S. companies, because relatively, I can trust them. This is relative, not that I'm right, but this is relative. I just take foreign stocks off my list because there's got to be stocks to buy in the U.S. in moments like this if I'm going to buy stocks. So let's go back to the markets here in the S&P. I think we'll just have to keep checking in every week. But let's go see what's leading besides staples, Ivan. Anything on our SL50 list?
All right, let me go here. Well, there's a lot of red today, but as you can see, we have Twilio is number 1.
Twilio. Ivan, Twilio.
PayPal is there. FireEye, which is a cybersecurity stock. We have a few retailers, Tractor Supply, Alta.
Yeah, I think people need to make a new watch list with these names. This Ubiquity. These are stocks that were. This is e-commerce, security, select retail, and software platforms are taking the lead here. This Exact Science, a really cool company. I know, like, I'm going to be crude here, but you can basically shit in a box, send it off instead of the. I was here getting the story while I was with a friend this weekend who used the product. Basically, it replaces the colonoscopy. So a lot of men have this has been just a kind of a sneaky. I mean, they don't have an earnings play, but this is a really cool company in the cancer space that's just been a monster winner. Anyways, their key product is this colonoscopy product where you basically shit in a box and replaces that nightmare colonoscopy. Tom, have you heard of this thing? It's so funny, but like, I think what would be cool for this, Tom, this goes to our idea where you could take a little piece of shit and send it to an enemy as well. So if Exact Science, I have an idea for Exact Sciences, Ivan, where you could actually not just have it tested for colon cancer, but send a piece to one of your enemies. So it'd be a nice social media play for Exact Sciences. But this is obviously a very loose, aggressive stock, but it's got the right buzzwords: diagnostics, pre-cancer, early detection. It's a stress for me, the colonoscopy. Guys at our age have to get them every 5 years, and it's a really interesting technology, and people are using it. So go back to your list, Ivan. These are all going on my watch list. I'm replacing a lot of broken down. Oop, go back. So I'm adding all these companies right now to my watch list for some of the Chinese stocks that I used to follow. You can see no Chinese stocks on this list. If China's going to bounce back, they'll start showing up on this list. But my exposure to China with Tencent, and I think you're seeing some potential new leadership, and it makes sense, right? These are growth potential companies, including Starbucks. Zebra's been an e-commerce winner that I've talked about before, but PayPal is really holding in there. Can we pull up PayPal? Like relative to Square, this is holding up much more, and they just their prices.
Yeah, I mean, yeah, definitely, it's looking better. Even though I shorted today for intraday.
Which one? Square?
PayPal and Square, both of them.
I mean, I'm not like I'm just saying they're. I like these names on your list to replace some of the dogs that I've been stopped out of or replacing, and you got to start getting used to how some new names are going to trade, because if the market's going to bottom and these are the new leaders, people eventually are going to know these names, and that's how momentum works.
Before the correction is over, we will likely see a drop in correlations between stocks. So we'll see some individual stocks trying to make at least new 50-day highs, 52-week highs. And these are the stocks that currently trying to do that. Zebra, UBNT, Twilio.
Etsy. I'm surprised Etsy's not on the list there.
Which one?
Etsy. Is it on the SL50 list?
It is on the list. Yes. On the list.
Let's go back to the list, Ivan. See some new names on the list too. What's on for week 1? So FireEye, what's that chart? And what's FireEye look like? That stock had been beaten up for a long time. Go back to
earnings surprise here, 200% earnings surprise. I mean, their sales are not really growing that much, but their chart is looking really constructive on several time frames. Yeah. Better than the general market.
Coming out of potentially a 3 or 4 year base, that's why it's showing up on the list. But like Twitter, it's going to have resistance the whole way up. Like, these are not all-time highs. These are just this company's had a history of missing numbers and disappointing Wall Street, so they got a lot to prove. But again, cybersecurity, low-price stock, passing through some of our filters and showing up on our list. So it's going on my watch list. If you want to be in real time market wisdom, Ivan, just walk them through your product.
Yeah, marketwisdom.com. We offer a monthly and an annual subscription options. Monthly is only 99. Annual is ends up being 79 a month, so you're saving 20%. And we offer a lot. We offer the SO50 list, which is a list of 50 market leaders close to breaking out. We offer swing trade ideas, which is usually lasts between a day and between 1 and 10 days. And then soon we're going to add longer term ideas.
Yeah, we're going to
run by you.
And they get you as a mentor, and you're responsive by email, et cetera, et cetera. Okay, but this is where we fish. This is all our work condensed into our list. And what's this Dex.com? DXCM, it's new on the list. A lot of new names. So, I mean, there is some rotation. People are looking. People are not in complete retreat yet. Oh, it's not some new name. It's actually triple.
Yeah, it's a biotech stock. But
ambulatory use by patients with diabetes. Okay. So money's not in full flow out of the market, as we can see here. And there is some growth names on the list. If the selling persists so, it's going to catch everybody. So be selective right here with the markets below the 200-day moving averages. Anything to add finally on that, Ivan?
No, there's not much to add. I'm continuing to be cautious. When I trade, I usually trade intraday nowadays. In the past few days, I've been short.
You've been short, yeah. And for the last month, you've been mostly cash, or 2 months, you've been mostly cash.
Yeah, I've been mostly cash, and during corrective markets, I tend to shorten my my trades. Like I trade mostly intraday. Like I'm not taking that many swing trades, just because volatility is a lot higher, intraday ranges are higher. So I focus on shorter term trades during corrective markets.
All right, we'll shut her down for the day. But thanks, Ivan.
All right, thank you, Howard.
But have a good week.
You too.